Hi, welcome back. It's been a while since I talked about teaching, but at the start of every semester, for much of the last decade, I've gone through a ritual of inviting people to sit in my classes. And before the spring of 2020 semester started, I went through that ritual again, and I invited people on the three classes I expected to teach in the spring. One was a corporate finance class to the first year MBAs, one was a valuation class to the second year MBAs, and the third was a valuation class to the undergraduates. And I fully expected to be in a classroom teaching these classes through the spring. But God had other plans. In March of 2020, as you well know, we had to move online. And I taught the rest of my spring 2020 classes from my office at home and essentially completed the semester. Now, as this crisis has stretched on from days to weeks and weeks to months, I'm getting more and more used to teaching from my office, but I'll be quite honest. As a teacher, I miss being in a classroom. Now, don't get me wrong. I'm glad that we have Zoom and WebEx and Microsoft Teams and Google Classes with platforms that allow me to teach online. But what I miss most about being in a classroom is the magic that I think can happen only in a classroom. That sounds mystical. If you ask me what the magic is or where it comes from, I have no idea. But if I could bottle it, I would drink it myself. I know it happens when it does, and it's the reason I teach. In fact, it's the reason I wouldn't give up what I do for any profession in the world, no matter how lucrative. So with that perspective, let me talk a little bit about the classes I teach. Now, to give you a little bit of history, I started teaching in the mid-1980s at the University of California at Berkeley. I was a visiting professor and given 5 different classes to teach. And to this day, I'm thankful for the work I did on those 5 classes because they range the spectrum and they forced me to be a jack of all trades and a master of none. And it plays out in the classes I still teach. In fact, at Stern, there are 2 courses I've taught pretty much every year going back to the mid-1980s. One is a corporate finance class to the first year MBAs. The second is a valuation class to the second year MBAs. And both classes I've taught off and on to the undergraduates. Along the way, I've also developed a third class on investment philosophies, which I've never taught in a classroom at Stern, but I've taught elsewhere in the world. In fact, all 3 of these classes I've been lucky enough to have delivered in different parts of the world in different formats, ranging from half a day to 3 days, essentially forcing me to think about how I would compress the material I have in a full semester class into a much shorter period. Very recently, in fact this summer, I created a 4th class, and it's not a class I will ever teach in a classroom, but it's a class on the basics of finance that I will call the Foundations class. So to give you a little bit of perspective on these classes, I thought I'd describe what each class contains. The Foundations of Finance class is really a class on basics. I start by looking at 2 constructs I use repeatedly in my other classes. One is the concept of a financial balance sheet, as opposed to an accounting balance sheet, and the other is the construct of a corporate life cycle, because companies are born, they age, and then they die. It's a very useful construct for understanding the challenges you face in business and finance at different stages of the life cycle. Then I spent a few sessions on a tool that we come back to repeatedly in finance, present value. It's amazing how much of finance is built on that concept. I talk about cash flows and the basics of risk and how they play out in discount rates and the mechanics of present value. Then I apply those present value concepts on 3 types of cash flows. Contractually set cash flows, for example, bonds, residual cash flows, which is basically a fancy word for equity, and contingent cash flows, another fancy word for options, the very basics. And then I covered 3 macro topics from the perspective of somebody who uses them in finance: inflation, interest rates, and exchange rates. And don't get me wrong, I'm not a macroeconomist, and I'm going to cut some corners here, but my interest in these topics is to the extent that they help me in whatever other financial analyses that I do. So that's a Foundations class. It covers the basics. Then comes corporate finance. And of all my classes, this is my favorite. I know you're not supposed to take favorites, but this is the ultimate big picture class. It's about those decisions that every business has to make to not just survive, but to grow and prosper. Ultimately, whether you're small or large, public or private, every decision that a business makes can fall into 3 buckets. There are the investment decisions. Where should you invest your money, or should you invest your money in the first place? What projects should you take? Should you do acquisition? Should you grow? The second decision is a financing decision. What's the right mix of debt and equity for my business? Notice that there's no one mix that applies to all businesses. The third big question is, how much cash should you take out of the business? As a private business, this is the cash you take out as an owner. As a public business, this is how much you pay out in dividends or use to buy back stock. Three big decisions pretty much cover the gamut of all decision making in a business. In this class, we develop the tools to address these questions. On the investment decision, we come up with the tools on how to estimate cash flows and earnings on a project and how to convert those into a return. And we also talk about the tools of estimating hurdle rates for projects. What is the minimum acceptable rate of return on a project? On the financing decision, we come up with tools on how to optimize the mix of debt and equity for your business, as well as what's the right kind of debt for your company, long-term or short-term, dollar or euro. And finally, on the dividend decision, we look at two tools. One is to estimate how much a company can return to its shareholders and how much cash a company can return. And the second is in what form, dividends or buybacks. Along the way, we have to decide what our end game is. What are we trying to do? Whose interests are being advanced? And in the process, we also have to tie these different decisions and how we answer them to the value of a business. Now, I call my class an applied corporate finance class. You're saying, what does that even mean? Everything I do in this class, I apply on real companies, and they range the spectrum. For instance, I look at Disney, large US entertainment company, Vale, Brazilian mining company, as different from Disney as you can get. Tata Motors, a family group company, an automobile company. Baidu, a Chinese technology company. Deutsche Bank, a regulated money center bank. And finally, Bookscape, a small independently owned bookstore. Everything I do in this class, I apply in those 6 companies. Corporate finance is a big picture class about the first principles of finance that govern how you run a business. Then we get to valuation. And people have preconceptions about what this class should include. I'll tell you something, I've never opened an Excel spreadsheet in my valuation class. I look at valuation from different perspectives, through the eyes of an investor, through the eyes of a manager, a consultant, accountant. I look at both valuing a business and pricing a business. You see, what's the difference? Well, take the class. I'll talk about the contrast between value and pricing. I talk about how you can augment value, enhance value, which is essentially what managers and consultants should be doing. I look at valuing private companies and public companies, small and large, companies across the life cycle from growth to distress. This is a class about valuing just about any asset or company. By the end of this class, I would hope that if I gave you something to value, you'll have no trouble at least approaching the valuation from the right perspective. Now, in my investment philosophies class, I look at, how do you construct as an investor a philosophy that's right for you? Notice how I structured that. There is no one right investment philosophy. That's why it troubles me when people read books about Warren Buffett and try to be like Warren Buffett. You have to find the investment philosophy that best fits you. So in this class, I try to stay true to that objective. Here's what I do. I provide a whole menu of investment philosophies, ranging from not just the old-time value investing philosophy that some people might believe is the best, but I look at everything from value investing to growth investing to technical analysis and charting. Much maligned philosophy, but it's a philosophy nevertheless. I look at short-term philosophies and long-term philosophies. I look at philosophies built around trading on information, arbitrage. So I present a menu of philosophies, and with each one, I look at the history of this philosophy, whether it's worked or not, and when it's worked, what you need to make it work. What are the ingredients that you need to bring to the table to make that philosophy work for you? And along the way, here's what I hope will happen. That you will find a philosophy that best fits you as a person, given your needs, your philosophical makeup, your psychological makeup. This is the philosophy that's right for you. So you've got foundations, that's a basics class. You've got the corporate finance class about financial principles and valuing a business. Valuation class about how to value or price just about any asset. And you've got the investment philosophies class. Now, as you look at these classes, you might wonder, should I take any of these classes? I've prepared a little flow chart. So don't take this too seriously on what classes you should or should not take. If you're not interested in finance at all, don't take any of these classes. Why would you want to torture yourself? If you have absolutely no background in finance, I would suggest you start with the foundations class because that covers the basics. And if you have no more interest in going further, if all you need to know is just enough finance to make yourself dangerous, just stop there. If you're interested in following through, if you're interested in other topics in finance, then I'm going to ask you, what is it that you want to learn about? If you're interested in learning about how to run a business, you're an entrepreneur, you're a venture capitalist, you're a private equity investor, or you're just interested in why businesses do what they do, then I should take the corporate finance class. In fact, I think every person in business, no matter what discipline you're in, will benefit from taking a corporate finance class. And if that's all you're interested in, stop. If your job is in the depths of valuation, you're an appraiser, you're an analyst, or you're a value investor who truly wants value companies, then you should take valuation. But I strongly recommend taking corporate finance as a precursor to valuation. You really can't value a business if you don't know what makes a business tick. But if you're not interested in either valuation or corporate finance, you just want to get a perspective on investing, develop a philosophy that you can then use that will guide you on how you should invest, then go directly to the investment philosophies class. It doesn't require any serious mechanical tools from the other classes. Now, if you want to take all three classes, you're welcome to corporate finance, valuation, investment philosophies. I think you're asking to be punished in a sense. You might be a glutton for punishment. But you're welcome to take all three, but pick and choose what you want to take. Now, I've given you a rough sense of how many hours each class will take today. Don't come back to me and say it took me less hours or more. This is just my judgment call. Because how much time it'll take you to take each class depends on the platform you use. Let me explain. My corporate finance, my valuation classes, I've taught in a regular classroom. And I teach in a regular classroom, the class gets recorded. And you can get the full class if you're interested. If you go to the links that you see below, those are the entry pages for my corporate finance and valuation classes. So you go into those entry pages, you will see what the full-time MBA and undergraduate classes will see in a class. So to give you a perspective, my MBA classes are 26 sessions of 80 minutes apiece. You will see 26 lectures, each 80 minutes apiece, with everything that goes with those lectures. Slides, tests, exams, projects. It can be overwhelming. So if you're looking at something that you can finish in short time periods, don't do this, because this will take up a big chunk of your time. But if you have the patience, this is the closest you will get to a full-time class. So if I've given you the links here, because you can watch the videos either through the NYU server, and the links are available at those webcast pages you see in the first section. But NYU does wipe out its service every 2 or 3 years. You're saying, so what? Well, some of you might take more than 3 years to actually finish the class. So I've also put these same lectures. There's no difference between the lectures on YouTube. So you can see playlists on YouTube for each of these classes. I've listed out both the spring 2019 and 2020 classes for a simple reason. As I said, spring 2020 ended up becoming a hybrid class. Half the class was in the classroom and the other half was online. Spring 2019 was a more traditional in-classroom class. So you can take my regular classes, the most time-intensive of the options. But I learned very early in my online teaching life that nobody was meant to watch 80 minutes of a class at a go on an iPad or a computer. It's like putting needles through your eyes. So along the way, here's what I did. I took my 80-minute classes and I converted them into 12 or 15-minute classes. And I make a confession, it wasn't that difficult to do. That tells you something about how much an 80-minute class is padded. But basically, these 12 to 15-minute sessions capture 90% of what I would give in an 80-minute session. So I have pure online classes I've created for all 4 of my classes. The Foundations of Finance, or Corporate Finance, the Valuation, and the Investment Philosophies. And these online classes are also available, you can go through my website again, and I've given you the links for the entry pages, or you can go directly to YouTube because there are playlists for each of these classes. These classes take less time, they're more compact, they come with less stuff. So they can be less overwhelming. Now, the plus of both the regular and the online classes that are on my webpage is that they are free. The minus is that they come with 2 problems that might daunt some people. One is that there's no certification. I can't certify that you finished the class. First, because I don't have the bandwidth to do that. I can't give you the exams, grade the exams. And I have no way of knowing whether you watch the lectures, and I don't really have the inclination either. It's not the business I want to be in. So they come with no certification. The second is they require some self-discipline. One of the things that you probably learned as you take classes online is how easy it is to get started on a class and how much easier it is to just drop out. You get to session 3, life gets in the way, you forget all about it, and you stop at session 3. It requires a certain amount of discipline to keep going through these classes. So you have no certification and requires self-discipline. But if you find those to be game stoppers for you, there's a third option, which is you can take all 4 of my classes as NYU certificate classes. Let me take that back. 3 of the classes are certificate classes, 1 in corporate finance, 1 in advanced valuation, and really it's the same class as my valuation class, but NYU thought it would sound better if they called it advanced valuation, investment philosophies. Incidentally, the corporate finance and the advanced valuation class have my foundations of finance sessions as freebies thrown in. The plus of taking a certificate class is you get a certificate, you would have to take exams, there's a discipline of having to watch the sessions each week. And every 2 weeks I do a live WebEx or a Zoom session where you can ask me questions. But it does come with a catch, which is these are offered by NYU and NYU doesn't offer freebies. So there is a price tag, and I'll let you check out the price tag. And please don't come back to me and say that's way too expensive, I can't afford it, because there is that free option, and that's all I can do, that I can offer. This is an NYU class. They set the pricing. I don't control that. So if you have complaints, take it up with NYU. But all 3 options are available for all of the classes. Now, having talked about my classes, I also want to talk a little bit about how this crisis has put the business I'm in at risk. What business am I in? I'm in the education business, but for almost 1,000 years, the education business has been dominated by the university model. Now, I've said this before, but a couple of years ago, I was in Bologna, in Italy. And I had the good luck to actually visit the University of Bologna, one of the first full-fledged universities. And you know what? I actually walked into one of those old classrooms, 800 years old. And it's amazing how little has changed. The university model has survived and thrived for 800 years. Competitors pop up, but they keep getting knocked off. In fact, as recently as 10 or 15 years ago, when MOOCs came out, remember massive online courses, people said this is going to be the death knell for universities. Universities swiped them away. But the university model, if you think of it as a business, is a terrible business model, right? It's a model where there's no corporate governance at a university stinks. The costs are out of control, and universities have no sense of who their customers are. In fact, the true customers are actually the students who pay the tuition, but universities seem to have no idea how to treat these customers. In fact, they mistreat them. So if universities were business, they'd have crashed and burned a long time ago. But they've been sustained by a couple of forces. One is inertia, which is people have been conditioned to believe that you have to go to university to get an education. And the second is they operate a screening mechanism. They offer more than just classes. Okay? So if you're wondering why disruption hasn't already happened, it's because many of the tech disruptors who tried to disrupt the university model misunderstood what the university model was all about. In fact, a few years ago, I did a session called Barbarians at the Gate about what you get in a university degree. And if you get a chance, take a look at that session. There's a link to it on this slide, where I've talked about what you get as a package for university degree, but universities have kind of held on. They've been able to put the disruptors at bay until this crisis came along. And this is going to be a test of the university model for a few reasons. One is, as classes have moved online because of this virus, now it's amazing how the many students who realize that the classes moving online have made no difference at all. And I'm going to say something harsh, but I'll say it anyway. If your classes in a regular classroom are taught without energy, enthusiasm, or engagement, why is it going to be any different online? So when students moved online, they said, this guy still reads off the slides in the front, still has no energy. What difference does it make? That's the first problem. The second is, as students started thinking about what they missed the most about universities. And I had a junior from college, stuck at home, and he was telling me about all the things he missed. The classes were way down the list in the things they missed. It was the parties, it was being around their friends, it was being back in away from their parents, whatever it was. Classes were way down the list. And the fact that universities were not able to offer a tuition break as they moved online tells you something about the cost structure at university. I mean, if you talk about operating leverage as the proportion of your costs that are fixed, universities have incredibly high operating leverage. Almost all of their costs are fixed. And finally, I think this crisis has made people rethink whether you need to go to a university for 4 years to get a degree. In other words, this might shake a few people out of that inertia. So I'm not as pessimistic as some. For instance, my good friend Scott Galloway believes that this is going to be a death knell for a lot of colleges. And I agree with him on a lot of the points he makes about the weaknesses of colleges, but I do have more hope than Scott does for the university model. I do think this is an opportunity for universities to rethink what their end game is, what their mission is. I think the mission for a university should be education. And I call, maybe I'm old-fashioned. I think it should be education. I think they need to think about their students as their end customers. And I think they need to really value teaching, not just talk the talk, but walk the walk. And if they do, I think they have a chance to stay in the game. But there's a shakeout coming as a result of this crisis to some of the weaker colleges, especially the colleges which essentially had little to offer in the classroom and were still charging the tuition as if they had much to offer. I do think that this, for universities to change though, there is going to be pain. And you know who's going to feel the pain the most? The two groups that have benefited the most from the existing model, which is tenured faculty, the administration that runs universities. There's pain coming. I mean, as a tenured faculty member, I've never understood how you're guaranteed a job for life. I mean, what other profession is that even true for? And if your argument is we need tenure to protect our intellectual freedom, come on. You're not Galileo. Nobody's chopping off your head. In fact, much of academic research is so abstract that nobody really cares. You think you're going to get fired because of your research? First, the people have to read it. So I think that there is change coming for the universities that welcome the change. Universities that act like nothing has happened, well, they're in for a bad surprise. So here's the end game. It has always been true, and I hope these last few months have brought it home, that learning is not restricted to a classroom. In fact, it shouldn't end when you come out of college. It's a lifelong process. And I've never believed that anything I teach in my classes is so profound or so amazing that you have to sit in a class to take it. So I feel no qualms about sharing what I teach. And I also don't believe that I have the knowledge or the expertise to have the answers to every question you might have. The way I think about teaching is it is my job to show you how I think through an answer to a question, even if it's the wrong answer. It's the process of thinking through an answer that is really education. I've used this expression before and I'll use it again. My job in teaching is to be transparently wrong rather than opaquely right. It's to not act like some expert and spout out what I think the end answer is, but to kind of explain to people how I reason my way to that answer so they can see what I might be doing wrong. So I hope you find some of my classes, maybe even one of them, useful. And if you do, thank you. And you don't have to thank me, just pass it on, because learning is something that always grows with sharing. So I hope you share your knowledge with others. Thank you very much for listening.